going on, guys? Just making a little breakfast right now. Got a bit of a day off from work. I'm on virtuals right now, meaning I just have to be on call if work needs me, and I can just hop on a little video chat and handle whatever business I need to do. But just got finished filming a watch collection video. I don't want to show you too much, but if you guys want to see that, it's probably going to be up on the channel already, so go to the channel and check that out. Otherwise, we're going to be going to the gym, and let's see what else we have in store for the day. And of course, everything happens at the same time. I have a virtual call that I have to do for work, and now the washer dryer people are going to go deliver the new washer at the rental property because it broke like a week ago. Literally, I just bought that washer brand new, but the drum came off the thing that spins, so like the entire washing machine separated from the thing that holds the clothes. And so I had one tech come out there, check it out. They said, okay, this is totaled. We can't fix this washer. We're gonna have to deliver a new one. Thank God the washer was under warranty. So now they're just gonna deliver a brand new one, and I have to kind of manage that over the phone since I think my renters are out of the house. And so I'll probably have to go visit down there after it's all installed just to make sure everything's working fine. I'm trying to make my dang breakfast and it hasn't even been started. So, hey guys, if you are a landlord and trying to work and trying to film videos, eat breakfast so you can go to the gym at the same time, these are the things that are bound to happen. So you just accept that you asked for this and these are the steps you need to make to get to financial freedom. So I'm gonna eat my eggs, handle this washing machine BS, and go to the gym after I finish my work. I'm just calling regarding the washing machine, and I just wanted to see if the washing machine was all good in the installation.
Do you have what do you mean, you bought like a dishwasher from it? Or?
No, a washing machine. There should have been a installation earlier today around noon. I just wanted to check if it was all good because I wasn't there when it was installed.
Everything is all good and everything went well.
Perfect. Thank you so much. I appreciate it.
Have a good day.
Thank you. You too. Bye-bye. Yeah, washing machine all done. So now let's talk about what the title of this video says. The basic strategy that I use to be really successful in stock investing. My entire portfolio, I actually tripled my money. If you can see in the screenshot I'll put on the video, I have plus 198 point something percent. But with the changes in the market today, we're definitely well over plus 200%. So I'll show you guys the strategy that I use on how I did that. Okay guys, I got my computer pulled up and let's talk about that stock strategy that helped me make those great gains on my stock investing career. Now, bear with me, this might be a little bit lengthy, a little bit wordy, but I wanna make sure you guys get a good grasp of the 3 steps that I use on how I stock invest. Like I said, it's fairly basic, it's beginner friendly, there's no fuss, no gimmicks, there's no luck. It's all about finding stocks at a good price, seeing if they're gonna go up, buying it low, selling it high. All right, so let's get into it. I got my computer set up right here, so I got a couple notes too so I don't get lost in my explanation. First step in doing so, find big name company stocks that have had their prices drastically reduced in like the last 2, 3, 5 years. So look for big name stocks, Boeing, Carnival Cruise Ships, oil companies that you've heard of, tech companies that you've heard of like Google, Amazon, apparel like Adidas, Nike. Think about those, like those common brands that you've heard of, and then just go through them one by one, different ones in different sectors so you get some diversity in your portfolio. And then look for the ones that have gone down 30, 40, 50% over that time, right? And so get a list of like 15 or 20 of these. To make this easier for you, since instead of going one by one, just go on ChatGPT and type in which blue chip stocks have decreased 40% or more in the last 2 to 5 years. And it'll compile you a nice little AI generated list of stocks, and that can kind of get you started on your search. Okay, so get like a list of like 15 or 20 of those stocks. We'll check on later on with the next steps to see if they'll make it through the cut. But that is step one. Find blue chip stocks that have gone down 40 to 50% in stock price or higher in about the last 2, 3, 5 years. So remember, step one is we're looking for blue chip company stocks that have gone down 40% or more over the last 2 to 5 years. So one of the companies that I'm doing this with is Nike. I've been investing heavily in Nike over the last few months. So if you look here, Nike, does it check off the box that it's a blue chip stock? Yes, Nike is one of the top 20 brands in the world. Everybody knows Nike. They're probably the biggest retail clothing store in the world. So blue chip, check. Now, I have the stock chart set on 2 years, okay? I got 2 years right here. And over the last 2 years, it's gone down 45.64%. So the price is now $59.79. It looks like in December 19, 2023, at the high, it was $121. That's about double what the price is today. That's not part of the criteria, but I just want to see the percentage. We're down 46% over the last 2 years, and it's a blue chip stock. It meets the criteria. Now, we're just using one example, but remember, I want you guys to do this for like 15 or 20. Okay, once you've compiled that list of 15 to 20 stocks, now you're gonna move on to step two. You're gonna see if the PE ratios of those stocks are considered undervalued, meaning are we getting a discounted price for those greatly reduced stock prices on the stocks on your list. So you can check the stock PE ratio by going on to whatever database you want to go to, whether it's like the Yahoo Finance, or do you want to go through the Apple stock, which is what I use. And then you'll see on there the price to earnings ratio, or the PE ratio. And I'll show you where that is right now. So if you go on the Apple stock app, you can, let's see, SoFi, for example, you'll see right here, it says, I'm gonna zoom in, PE, and then a number right next to it. And that's your price to earnings ratio. So for those of you guys who are new to stocks and don't know what a PE ratio or a price to earnings ratio means, a PE ratio is a valuation metric used to analyze a stock by comparing the stock's price to the actual amount of money or revenue that the company is actually making. The higher the PE ratio, the higher the stock price is relative to how much money the company is actually making. And the reason why that can differ is because people are willing to pay a higher value for the stock, even relative to what the company is actually making, if they think the company has future growth, or the value of the company is gonna go up in the future. Sorry about that, I got text messages coming in. Disrupting the video. And so what we wanna look for is a PE ratio that's lower, meaning that right now, people aren't paying as much for the stock based on the revenue. Meaning that in the future, when the company that you're going to invest in goes up in value and up in growth, people will see that and they'll be willing to pay a higher PE ratio, ergo a higher stock price for that stock. So in simpler terms, a higher PE ratio means the stock is more expensive because people are willing to pay a higher price than the actual revenue that the stock or company is making. Vice versa, if the PE ratio is low, it means that the price of the stock is lower or at a discount because people are willing to pay a lower price for the stock relative to how much money the stock or company is actually making. This is what we're looking for if we're looking to buy a stock at a discount. So what I want you guys to do is go through each stock on your list. See what the PE ratio is for each of those stocks and write them down next to it. After that, I want you to check what the average PE ratio is in the sector for each one of those stocks. There's a bunch of different sectors and stocks are part of different sectors in the economy, such as like technology, retail, manufacturing, energy, technology, etc., etc. Okay, so now we finished step one of the strategy. Step two is to check the PE ratio if the stock is undervalued based on that PE ratio being under average. So like I said, go to either Yahoo Finance or what I use the Apple stock app. Look right here, you'll see the PE ratio, the price to earnings. So for Nike, it looks like it's 19.86. Now I want you to go to each sector of each stock so far. Like for Nike, it's in like the clothing retail space. It's in that sector. So I want you to look up what's the average PE in that sector. So I already have it up on this browser. So I literally just looked average PE ratio for clothing industry. And there's like a little AI generated answer here. It looks like for one person, it said 22.64, which includes like 33 stocks that they include in this sector. Another person said a weighted average PE ratio of 32.67 based on 26 stocks. Really, it's like a bunch of different companies that have their own criteria of what they consider clothing industry. You know, this one even says luxury. One of them, where is that thing? Right here, luxury goods. I wouldn't consider Nike a luxury good, but I guess they included in that. And this says a PE ratio of 27.47. Either way, we're looking in like the low 20s to maybe even high 20s ratio. And we know that Nike is 19.86. So you know you're undervalued. It's under the average. So more than likely, it's an undervalued or discounted stock price. So it checks off the box for step number 2 on that strategy. So now that we've done steps 1 and 2, you should weed out all the companies that didn't make the cut out of the first 2 steps. So hopefully out of the original 20 companies on your list, you should still have like 10, 12, maybe 15 that are left. And so we're gonna move on to step 3 with the companies that are left, which is see what the companies on your list are doing to improve the business of the company. Since these are established blue chip big companies that used to have a higher stock price and now it's gone down, they should be implementing strategies on how to make the numbers of the company and the business run better. Strategies that companies like this do are either cut costs like labor or materials. They could be expanding to different markets, possibly like going to international, going from just in-person brick and mortar retail to online, or the other way around, going from just online to expanding to brick and mortar in-person selling. Or another strategy that these companies can do is something called share buybacks. This is when companies buy back their own shares of their own company so that they can have a larger proportionate ownership of the company, which will take away available stocks for retail investors like you and I to be able to purchase, which artificially makes the stock price go up since there's not as much supply for people like us to buy. This is really where the brunt of the work comes in. You really have to dig either in the company's website or with a Google search. Are the companies doing good strategies? Are these plans actually working? How effective is it? How is it affecting the numbers? That's really what's key. Is it making the net revenue go up? Is their income going up? Are the costs of business going down? The numbers have to reflect some kind of improvement, no matter how effective or glamorous the strategies might sound. All right, going back to our example with Nike stock, you can see down here that there's some news regarding the stock. So it looks like Nike acquired Skims. I already knew that happened a few weeks ago, but they acquired Skims. So that's another thing that will raise revenue for the company since they just added a really big company that's gonna make more money for the company. It looks like analysts have raised the price target for Nike. That's a good sign when a bunch of big companies are saying, oh, Nike is probably gonna have a higher price target in the future, meaning they're expecting the stock price to go up. It looks like the Nike CEO is building out his turnaround team, meaning they're turning around the company. So he's hiring workers in a particular team that's actually gonna make strategies of how we're gonna make this low price go back up here, which is good. This is just a short example of what you should be doing to research a company. Granted, this is just news for the last week. I want you guys to go weeks, months back and see what else is the company doing. Is the net income getting better over the last few quarters? Is revenue getting better in the last few quarters? Is debt going down? Is new customers going up? You should be looking through all of these things, not just the articles and the qualitative data, but you should be going into the numbers and the quantitative data. You know, what's their assets? Is the assets more than the liabilities, et cetera, et cetera. So you should do that with every single company that you have left on your list. So you guys should be doing that type of research, both qualitative and quantitative, with each of the stock that's still left on your list. And after doing that, weed out all the ones that don't look like they're implementing a lot of strategies, they're not making a lot of changes, or they are implementing changes and strategies, but they're just not reflecting in the numbers. It's not resulting in more sales or costs actually being cut or net revenue being improved. So after you weeded out those stocks, hopefully you still have about 5 to 10, maybe even 12 that's left over. And if those companies have made it through the step 1, step 2, and step 3 filters that we've weeded them through, then more than likely the stocks that are left standing on your list are undervalued, good quality, and more than likely stocks that are gonna go up in price in the future. Ergo, they are good investments and good buys for right now. A good rule of thumb to follow is have diversity in your portfolios. Like I said in the beginning, you should have picked blue chip company stocks from different sectors: retail, oil, energy, food and beverage, technology. Having a diverse collection of stocks in your portfolio is what's gonna protect you in the event that when one sector gets hit really hard or when one stock gets hit really hard. Because if you lose your money theoretically in one of those sectors or one of those companies, you have the diversity from other sectors and other companies in your portfolio to protect you from losing it all. And that's it, guys. That is my basic, beginner-friendly, simple, straight to the point, no frills stock strategy that I use to triple my money in my stock investing career. Now, there's no magic here, there's no luck, just looking for companies that are big and trusted, established, have gone down in price over the last few years. The PE ratio shows that they're more than likely underpriced and undervalued and discounted, and they are implementing strategies and changes in the company that's gonna improve the business, improve the net revenue, and overall make the stock price go up in the future when you're gonna go and sell. Hopefully you guys found some value in this video. I tried to make it as clear cut as I can. If you guys have any questions or need some clarification, put it down in the comments below and I'll answer to all the comments. If you did learn something from this video and you're gonna implement some of these strategies in your stock investing, do me a huge favor and like the video and also subscribe. I am just a tiny channel and I'm just starting and I just want to give value and share my knowledge to all of you guys out there. Any little bit helps. I'll be posting more videos like this, including stock investing, real estate. I already have a few videos up on the channel, so if you guys want to go check them out, click the little channel icon down below and you'll see the other videos that I have posted on there. Otherwise, guys, good luck, do your due diligence with your stock investing, and let's make some money.